Hi guys. Welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about strategies to create cash flow. So make sure to watch the full video. If your business is struggling for cash flow, learn the 9 tips experts recommend for survival. Cash flow is the money moving in and out of your business. Positive cash flow means you're earning more than you spend. Strategies for managing cash flow include invoicing customers in a timely fashion, offloading inventory that doesn't sell well, and closely monitoring where you spend money. Experts also recommend securing financing before you're strapped for cash and restructuring payments to free up cash. Proper cash flow management is a key strategy that every business owner must master for long-term financial success. Managing cash flow can be one of the biggest challenges business owners face. A recent study from Intuit found that 61% of small businesses around the world struggle with cash flow. Nearly 1/3 of those surveyed are unable to pay vendors, loans, themselves or their employees because of cash flow issues. To combat this struggle and stabilize your cash flow, you can incorporate several tactics into your business model. How do you get positive cash flow? Sales are obviously the best way for a business to gain cash flow. If you're not generating sales, you're not really a business. Of course, saving money in operational expenses helps, too. It's important to have detailed budgets and to curb unnecessary spending. How does managing your cash flow affect your future? Cash flow management is vital to your business's success. If you can accurately project cash flow, you will steer your company in the right direction. If you understand cash flow techniques, you can get ahead of the market. You'll even be able to predict cash flow, because you understand the revenue cycles of customers, vendors, suppliers, and contractors. Every business has high and low seasons. Understanding upcoming expenses for employee overtime, replacement equipment, and other needs goes a long way to ensure your business is well positioned to handle any bump in the road. The first step is to determine the cash flow your business needs. Jay Singer, Senior Vice President for Small Business at MasterCard, said that this is done by analyzing the current state of your business. It's important to understand how much cash you've been using and plan to use, as well as the length of time it will take to acquire more cash, Singer told Business News Daily. While every business's needs are different, it would be wise to have enough cash on hand to cover up to 6 months of your average cash outflow. Why is cash flow important to a small business? Cash flow is important to a small business because it shows how much money is actually moving in and out of your company, not how much money you're awaiting from accounts receivable. If your cash flow is positive, you'll know you're earning more money than you're spending, and you'll have cash on hand to cover payroll, equipment purchases and upgrades, loan repayments, and other key business needs. If your cash flow is negative, you may find yourself unable to pay your employees and suppliers, cover your monthly rent, and have the money needed for any other daily business costs. For these reasons and more, you should always prioritize cash flow strategies in your business planning. When you properly utilize such planning, you'll know exactly which times of the month you can expect money to be deposited into or withdrawn from your bank account. With this information, you'll know when you actually have the cash on hand to cover your expenses. Think about it like this: even if you've invoiced a client for a substantial amount of money, you can't use that money until you actually have it. And cash flow strategies help you know just when that will happen. An important element of your business model that can help with cash analysis is proper accounting standards. While businesses can run on a cash or accrual basis, Rohit Arora, CEO of small business loan provider Biz2 Credit, advises every business to take advantage of both. How to calculate cash flow. One of the most important aspects of managing cash flow is understanding how to calculate it. There are 3 main formulas that can help you calculate cash flow: free cash flow formula, operating cash flow formula, and cash flow forecast. Each formula serves a different purpose. Free cash flow refers to the resources available for distribution among all the stakeholders in the company. It shows you how much capital you have to reinvest in the business, such as purchasing new equipment, expanding your store, or investing in a new product for your company. the operating cash flow formula provides an at-a-glance view of the day-to-day cash flow within your business. All three of these formulas are essential to knowing how much money is flowing in and out of your business at any given time. Beginning cash plus projected inflows, projected outflows equals ending cash flow forecast. Projecting cash flow. Determining when you'll receive and spend money is part of the budgeting process. To successfully project cash flow, assess your prior year's numbers as a basis of cash flow for the following year. Then, adjust for anticipated changes, such as new pricing, and more personnel and funding sources. As the year unfolds, you should update your cash flow projections to accurately reflect developments in expenses and profits. Comparing budgeted cash flows to actual deposits and expenditures helps you predict cash flow later. Another strategy is to add the cash you already have to the money you plan to receive. Then add up how much of that money you anticipate spending. Even the most successful organizations find that their forecasts change regularly, so it's important to monitor cash flow. Preparing a cash flow statement. Cash flow statements are indicative of your company's health. They show that you have a healthy business capable of continuing operation at any given time. You can find a lot of extensive breakdowns on cash flow statements. Here are some basic terms and elements of a cash flow statement you'll need to know in order to create and read yours. Cash from operating activities. This is how much money is flowing into your business. If this number is lower than net income or it's a negative number, this could be a problem. Net change in cash. This is how much cash your company gains or loses based on the investing and financing activities. What should you do if you have a cash flow deficit? In the event of a cash flow deficit, these are some of your options. Apply for a loan from a banking institution or individual. Apply for a line of credit from a bank. Speed up the collection process. Finance the purchase of equipment through leasing or loans. Liquidate assets. Delay payments to vendors. Sometimes you may have a surplus of cash. That money can affect future opportunities, so you don't want it to sit around. Accountants recommend that you make the surplus work for you. You can do this by making short-term investments and using the money to pay off debts faster. That way, the money will benefit you through generated interest or shorter loan terms. Always consult with a professional accountant before making major financial decisions that could impact the future of your business. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.